Welcome everybody, my name is Michael and today we are discussing about the IRS getting involved in the FTX case. They have assigned a unit for the FTX bankruptcy proceedings. Now what's interesting is we can have a direct correlation between the IRS and scams from the past and what can happen in this case. One of the largest scams ever on American soil was Bernie Madoff's big $64 billion Ponzi scheme, of which back in 2008 and 2009, when it crashed, and later when there was lawsuits and potential victims were able to recover some money, in 2009 there was a ruling following the Bernie Madoff case that customers who have lost money would be able to claim assets at a loss without having to wait for the full bankruptcy proceeding to play out. So that was the rule for victims of theft and Ponzi schemes since 2009. Now, that's one positive aspect to it, but there is an attorney out there in a Washington, D.C. company that said she's not as optimistic about the IRS getting involved in making accommodations for FTX victims because they have three other things they're focused on. First off is what happened with the money with FTX. So, does FTX or any of its entities, currently around 130, owe the government money? This could be hundreds of millions of dollars we're talking about. The second thing is they want to get access to a list that right now the courts have ruled that for the next 3 months they're able to remain private, but this list is pure gold. It's data. It's what all crypto exchanges want. It's data. It's customer lists. And there's a big reason they want it. They want to look for tax evaders. They want to look for U.S. citizens who are potentially hiding millions of dollars through exchanges, and they are seeking tax evaders, and they have sent a John Doe summons to crypto companies such as Coinbase, Kraken, Circle, SFOX. Obviously, they're going to look through FTX and Alameda Research. They want to find not only entities and businesses related to FTX, but of course, the main thing here is if they're able to connect one client from FTX, they might be able to connect it with the other exchanges. Suddenly, they might be looking at a huge case against just one person. And now we're looking at potentially millions of clients. So that's why it's huge and important for them. And the third and final reason goes back to what was mentioned about similar rulings for Ponzi cases. If there is a lot of users who have been impacted, where you can compare Bernie Madoff's victims, 40,000, to 1.2 million registered users for FTX, of which most of them were victims because most of them probably still had an active account and weren't able to withdraw in time. There is going to be deductions for capital losses, right? Because most people won't have capital gains in a year where you've lost a ton of money. However, a deduction wouldn't happen if you didn't lose money in the market, but rather lost it from the exchange shutting down or being shut down, in this case, by authorities. So if they're able to avoid having these deductions go forth, which they might, I mean, it's a very large case, but if they're able to avoid that, that means they're able to charge more money. They're not going to lose as much money. So it's not just about, helping the citizens. It's about also keeping as much money as they can for themselves. So there's three reasons they might have a vested interest in, but probably the largest of the bunch will be trying to access the customer data, because they're able to then, first off, track off the easy fish, low-hanging fruit, but compare it with other data from other exchanges and maybe find other businesses that are being held out, other sources of income that are being held out for thousands or hundreds of thousands of criminals in this case. So with that said, FTX has recently recovered around $5 billion. Everything is still in proceedings, and the next big update from SBF will be in October when it goes to court. So with that said, have a good one. Tax season is coming up soon, so take care.